Cool. All right, we are good to go. All right, welcome everybody. Today is December 1st, 2025. This is the Bookmap stream. My name is Spencer Riegle, and I am the chief crypto options trader and strategist here at DARMA Capital Trading. So each week we hop on and we do a stream with Bookmap. And so if you like anything that we talk about here today, or you're catching the recording, make sure to give us a follow at DARMA Cap Trading. We are becoming more active on there, and we're dropping some interesting stuff. So very curious your guys' thoughts on that. So any feedback is always great there. And then as well, you can reach me on LinkedIn at Spencer Riegle, and then also I'm very much active here in the Bookmap Discord. You can find our channel under DARMA Capital Trading. So let's dive into the disclosures, and then we got a lot to kind of go through today. So all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So each week we hop on and we talk about risk first, right? And so the easiest way that we think about risk is only trade with risk capital. And what do we deem risk capital to be? That's capital in which you're willing to lose, right? And so if that capital in which you're trading with, you need at the end of the month for bills, you need at the end of the week for groceries, or you need that for a better quality of life, right? In terms of going to a concert, hanging out with friends, maybe doing some exercise classes or something of that suit. That's not risk capital, right? And so there's a very simple reason that we kind of talk about that, and we start each week talking about it, is if you are thinking about all of those extracurricular events, right? You're not thinking about the trade. You're not thinking about what's here now and what's the facts of the markets are, right? The reason for that is it does have a psychological impact, and therefore you bring those biases into the market. And each week what we like to do is focus on the facts, right? And those facts, while they're very present, the fact of the nature of the business is trading is a game of risk and rewards, right? And so by no means is capital that's better suited in those areas better to use for trading, right? So with that being said, let's do some house cleaning. Last Friday was Black Friday, and then we also have Cyber Monday today. So there's a ton of cool discounts here at Bookmap that I'm sharing today. So the Black Friday deal, for those that are interested in the global plus the quarterly, there's a 50% off data, right? And so very interesting. It's going to carry through December 31st. Cyber Monday deal, right? So global plus a monthly, 60% off, and that's going to carry through the 31st of December as well. And then add-ons. Add-ons are 50% off as well, and that's going to carry through the 31st. So a lot of really cool deals at Bookmap. If you have any questions with that, either hop onto their website and you can check out all the deals there, or here in the Discord, there are tons of people that can help you. Yeah, exactly. So Steven dropped it in the Discord for those that are watching or catching the recording. So last piece of news here is Bookmap is running a Pro Trader webinar. And so make sure, if you're free during these times, come stop by, see how other traders are approaching the market. All bits of information, whether you take everything or you take small pieces, is always helpful. So that's a cool event that they're putting on. Make sure to stop by and grab some of that information. All right. So how we approach markets, and for those that have been around, which it looks like there are familiar faces, but I know a lot of people do catch the recording. So I do like to talk about it. We take a top-down approach to markets, right? And so what does that mean? We look kind of in a broader landscape, what's kind of happening in the macro, and then we dive in and we kind of peel back the market in terms of layers, right? And so we go from more of that macro broad outlook to more of that weekly outlook, which is short duration, very short duration for most part. And then we really get into the micro of the market, right, by looking at the liquidity that's in Bookmap, the resting liquidity, and then we talk about strategy, right? And so we dive in to the playbook, in which we talk about on our website. So in the macro, in terms of the what's kind of going on, seasonality again is strong. And so while we've consistently talked about this, and seasonally November was typically a good month for crypto, and we did not see that, right? So we have some new data. It is the last month of the quarter. We're going to talk about some events. However, seasonally, capital typically gets put to work in a positive direction in December. Does that have to happen? Absolutely not, right? And so we're going to talk about where that invalidates today when we go through some of that weekly structure. However, that's another backdrop, a positive backdrop to always lean on. On top of that, we have holidays. So here in the United States, we just got past Thanksgiving, right? And we have a couple weeks here before we start heading into the Christmas, right? And so Christmas is a big holiday here in the U.S. And abroad. But for the most part, all that means is we have a shorter kind of trading window, right? And so a lot of those flows have shorter periods in time to move. And a lot of that rebalancing happens towards the end of the year and then starting into the new year, right? And so expect the next few weeks prior to the 25th, which is Christmas, to be quite active and potentially active. And then historically what we've seen is more of a quieter week to end the year, right? And so Christmas falls on a Thursday this year. So that still leaves Monday through Wednesday of the following week to trade before the end of the year, right? New Year's is on a Thursday as well. So those are two kind of larger events that are going on. And then we, of course, have the FOMC. And so the FOMC for December is widely being watched. And so that's very important to kind of keep on the radar, see how the Fed is shifting and thinking about rates. And that's has and will impact the markets until that rate is known. And so then we'll see how we trade post, right? So on a large scale, without kind of diving too far into the weeds, those are the larger events that are happening. And then in Ethereum, we do have the Fusaka upgrade that should be around the quarter here as well, or around the corner here as well. So that is a positive catalyst to look out for in the short term. All right, let's actually dive over into the weekly outlook. But before we do so, let's go to the website and we'll talk about some more free stuff. So for those that are unfamiliar, we launched our website, DARMAcapital.trade. Feel free to check it out. We are always rolling out new ideas, new things, which is super exciting for us to continually ship and bring new innovative ideas to you guys. But always what I talk about is people love free stuff. We have a ton of free stuff. So if you head over to top right, sign up page, all the way on the right, free trader assessment and education. This is the free trader assessment is going to be a behavioral test that basically gives you a better understanding of who you are as a trader. And gives you some key insights on just how you operate within the world, right? And so a lot of that's typically interesting, as self-awareness is a big piece of trading, right? Beyond that, we have a large academy that we continually add to. I just finished some articles as well that I likely will be adding to the academy. And you can check all that out through the registration here. So all of the data and analytics that we talk about today, tons of education, quizzes, everything's here. It's all free of charge. The only thing that you have to do is give a few pieces of information. I believe it's name, email, and then some basic information. So make sure to check that out. It's absolutely free. And then if you have any questions as you go through the course curriculum, one, we absolutely love the feedback, so that's great. But two, we are here to help. So you can reach out to us in all the forms that I previously mentioned, and we'll do our best to get back to you as soon as possible. So without further ado, let's dive into the weekly outlook. And yeah, so I'm reading Steven's comment. So Steven asked, what is the Ethereum upgrade called? And can you share some more information on that? The Ethereum upgrade is Fusaka. And so, yeah, I will absolutely drop some articles in the Discord for you after we hop off. But that is right around the corner. For the most part, it is a protocol upgrade, right? And so largely, it's always positive to see the protocol moving in a positive direction, right? So in terms of markets, let's pull up Bitcoin and Ethereum because that's what we cover for the most part here each week to start, and then we've actually opened up to start covering the ES, and so we can actually cover probably one more. So if anybody has some recommendations they would like to walk through each week, by all means, we can do that, and we support futures, crypto, multiple different assets, right? So anything goes, and as long as we can support it. So all right, let's pull up on the left here Bitcoin, and I'm pulling up the perpetual contract here, and I'm looking at the weekly, right? And over here on the right, I have Bookmap to show us the liquidity, where that resting liquidity is. And how we approach each week is we break the market down, right? Markets are incredibly complex. So what we like to do is break it down in terms of easily digestible understandings, right? What are the truths of the market? And so how we approach that is within our playbook. In our playbook, you can see here is on the right, price maps on the left. And the playbook basically defines and helps kind of give you some guidance when you're approaching the price map, right? So current state of the market, right? Current state is bear trend digestion. So this is a signature state, has an underlying negative foundation, but may be set for some big sideways action. This can be a difficult trade state as the digestive nature can produce starts and stops for any trend signal. Positive reversal signals after a false downside breakout should be respected as they have the potential to extend up to the upper digestive extreme. If the market is indeed going to break out to the downside, it should just go and not look back. Maintaining negative structure is not the sideways nature. If not, the sideways nature of this market state will take over. Be aggressive on all sell signals at the upper digestive extreme, as they do have the potential to be the high point for the next reaction lower. Any positive signal above resistance is more likely confirming a neutral shift than a positive transition. So let me zoom back here, make sure that we can incorporate the R level. We see the start of the week to be Saturday nights at 0 UTC in crypto, right? Each asset class, we've done some research. In each asset class, we open at different times, right, for our data and analytics. So what we saw was price was holding over the previous month's close, over the previous week's close, and then we got, obviously, that sell-off last night. Now we're in a bear trend digestion, right? So market's performing to the state. The structure is negative, right? So the R level above the UT1 in this technical state defines the upper extreme for any digestive trade. This is the expected high point right here at 102,612.8 for any positive squeeze in the optimal sell area. Rallies up to this inflection point are expected to exhaust and have the potential to be the high point for any new reaction lower. Size management off lower selling opportunities should be considered to ensure enough firepower if this opportunity is presented. A worst case scenario when the R level is above the UT1 is when the market breaks out to the downside, which is what we're doing now. Early in the session, and then has a low volatility rally all day closing, recognizing this momentum shift early can produce a nice counter trend opportunity. The tell for this counter trend signal will typically be a positive reversal at the DP or a breakout above the directional. So currently, we are in the worst case scenario where the market broke early, right? Last night we broke basically 24 hours into the session, we produced a buy DP reversal, and that's where we currently stand. So this market is incredibly interesting this week, because not only do you have the previous week's low in alignment with your weekly DP, you have the start of the new month, right? And you're already producing a buy DP reversal. All of that can be powerful when approaching this market. So next we break it down and we look at strategy, right? So what's the strategy for this market, right? As we kind of go through here, a hedge theme is currently where we're in, which is a buy DP reversal. So let's find that within the playbook. All right. Oops. Okay, cool. Let me pull over the weekly again just to make sure we get the right one. Okay. So I'm going to read a little bit more than kind of what it covers. So expectations should be tempered, as the digestive nature of the state can keep the trade messy. If the digestive trade is going to continue, price action will stabilize around the DP and bounce. This opportunity can be captured by buy DP reversal, right? That's currently what we're in. If the market is going to bounce back into a digestive trade, it will do so quickly. Quickly means within the next 24 hours. Stabilizing above the DP after a quick exhaustive reversal, right? Which is exactly what we're doing right now. Broke through exhaustion level, priced right back through, retested previous week's low. It's not a coincidence that you have buyers right there that are holding, and then we just trade right back, right? A sustained trade below the DP is a sign of weakness that has the market vulnerable to a new leg lower. Use the sell DP breakout to anticipate a new trend move lower. The tell that the trade has some potential is negative trending price action. Without negative price action, the likelihood of a return to a sideways trade is high. Note, the market is working lower, but is in a laborious fashion. The market will provide opportunity. However, do not press any unrealized gains, right? And so that note basically is coming from the respect that we are still in a bear downtrend digestion, right? Digestions by nature have many traps, right? Bear trends, trending states, typically are optimal trading environments for most traders, right? Unless you're shortfall. However, because we're in a digestion, opportunity is more so existed within playing the extremes, and those extremes are defined by your R level all the way up here, your UP right here, which kind of creates that shorter area within this region from the UP down to the DP, right, which we call our critical. Specifically within 24 hours, right? So the DP is Stephen. I see Stephen's comment that said that I cut out. So I'm going to reiterate a little bit here. But DP is the most important level for the next 24 to 36 hours, right? Why? We're in a buy DP reversal. For the buy DP reversal to happen, reversals by nature should happen quickly, right? Why? You're trapping shorts, you're trapping longs. You shouldn't give them another opportunity to get out. If you're really going to push the trade against them, which typically happens in markets, those moves happen fast, right? Fast is relative to the duration in which we're looking at, right? So a daily price map, a fast move would happen in the next 30 minutes to an hour. A weekly price map, a fast move would happen within the next 24 hours, right? A monthly, it would happen in the next 3 days. A quarterly, it would happen in the next 2 weeks, a yearly, etc. Right? So everything's relative. But specifically here in the weekly, and we're looking at a buy DP reversal, that should happen tomorrow, if not tonight. Where does that target? 87,303.1, right, is the initial validation level for this trade. Over this positive variance here on the CR minus, which is just this brown dash line, that's where you get a validation of the buy DP reversal. That immediately targets basically 87,000 for your initial 1 APMD move from the DP. If the market's good, right, you will get a buy directional breakout that's produced over the previous month's close. And so the weekly DP, the reason why it's the most important is in order to get a market that goes right back over the previous month's close, you get that initial kind of fake out off the open of the month, and then that rally into potentially the end of the session, which is kind of talked about here in the state. Here in the structure. Everything needs to happen in terms of tests, right? And we always talk about this. The market always needs to perform to expectation. Otherwise, the optimal setup in terms of pressing the risk in which you were pressing doesn't make sense. At the very least, if the market is not performing to expectations, and let's say that this buy DP reversal kind of falls back under the previous week's low, there's no reason to press this trade, right? Markets can do absolutely what they want. Our job is to provide the structure to the market and look at the facts. And so until that level is broken, previous week's low, that DP, there's no reason to fade this market, right? There's no reason to look to short this market. The next level in which to look for potential stalling of that would be the directional, right? Why? Because we're looking for a 1 APMD move, right? Markets like to give 1 APMD moves. However, that first initial test is that CR minus, which is basically a half APMD. If you can get over that, you validated your thesis, and then you can move stops up. That's how we think about risk. That's how we approach risk, right? So currently, that is the optimal setup that's in play, even though it's a hedge theme. Let's talk about the downside. Downside is this was it. We rallied here into the close, and then we break overnight. That break of the DP under the previous week's low, that sets you up for a potential low or leg lower using a sell DP breakout, right? That's why this DP level becomes the most important level of the week. That DP breakout, we're still in the first day, second day, third day of the month, could be a bit extreme, right? Money inflows typically move a lot initially in the sessions, right? And we typically see that. And so when I say that, we are in the opening range of the monthly. So you can get exacerbated moves. Where does it go? Logical level is target the previous month's low, but more importantly, a sell DP breakout targets the DT1 for initial target and then targets the DT2 for your completion, right? Because the R level is so far above the market, selling and leaning into shorts aggressively does not make a ton of sense. So sizing really matters this week, right? If this market can't hold, absolutely, we can get a breakdown to 79,801. If not, 74,988, right? That would be a big trade. However, because of the price map in the R level here, this is the energy of the market. The further we get away from the energy of the market, the less optimal it comes from leaning into that position, right? If you look, and we look at it like this, if you look each week, where's that green level? Where's that R level every week? That's the optimal place for risk. That's where you want to be 100% of your risk allocated. The further you move away from it, becomes lesser and lesser of interest, right? So even if you do play the downside this week, the expectation would be 2 sides down, even though it looks enticing, I know. So that's kind of the outlook, the strategy for the week in terms of Bitcoin. Let's take a look at Bookmap here on the right side. So we have some resting liquidity right there at 87. So that's basically off this tactical high here. More importantly, what we're looking for is at 87,300. So that figure is important because we have to get through it to get to 87,300. So very important to look at the front running of the figure here on the CR minus. If we can get over it, that's positive, right? Again, price matters, and we are, as long as we can hold the CR minus, we're validated on a buy DP reversal that targets at the very least the directional, if not rotates through it. Beyond that, where do we have cash buyers in the market? We have resting bids kind of stacked all the way down. So 84,200, 84, 83,600, 83,200, and 82,100, right? Where do we see alignment? On the 84,200, not so much alignment. That's basically off of today's lows, right? Just right in that, off that negative alert distance on the DP, which we would monitor. However, because we are currently in a buy DP reversal, buying it off of there doesn't make a lot of sense. It's the hope that we would return over the previous week's low. No need to press. No need to press. Market should perform optimally, right? On the downside, beyond that, 84, we don't really see a lot of alignment here, but we do see alignment with that lower area down at 82, right? And so the 82 is right around that CRX minus. Again, as we move further and further away from the R level, stop and go action is typical, right? And it's almost as if this market could run out of steam to the downside, and that would not be abnormal, right? So you have a lot of cash buyers in there. Monitor them, watch them. We see alignment 82 and basically 84,200, right? So that is Bitcoin for the week. Let's jump over to Ethereum and do the exact same thing. So this is Ethereum's perpetual market. We're going to load up, and we're actually in a different state. So we'll break it down and read through that state as well. All right. Our level is still above the market, right? And we're kind of rotating around the previous week's low on the session. So currently we are in a bear trend correction. A market in a bear trend correction is a signature state and has produced a positive signal against a negative trend. The market is vulnerable to the downside. However, does have the potential to produce a counter trend corrective rise. The market is searching for resistance. Price action is characterized by a stop and go trade with sharp positive reactions. Positive corrective action can disappear quickly, so avoid leveraging up on any rally as the negative momentum will try to reestablish itself. This is a money state as good trade is expected. The market has played a card and will continue to tighten the collar on weak short positions or revert to negative bear trend structure. Don't fight negative momentum below the current session midpoint, as any new negative structure has the potential to be the start of a new trend move lower. So the current structure, we are in a negative sentiment bias, right? The R level is equal to the UT1, which defines the price range between the UP and the RUT1 level as the expected exhaustion area for any positive push. If the bear trend is going to resume, the market will reject this area. Look for reversal signals to add to a confirmation. A held breach of the R level has the potential to transition the market into a neutral state or a positive state. A false breakout or reversal is potentially the top of the next move to new move lows. If the market trades under the directional, it should remain below the price point in a bear trend if the bear trend is going to engage. Work any negative structure as there is a potential for a multi-session decline. If the market cannot maintain a trade below the directional and instead trades back up through it, the expectation should be for a difficult sideways digestive trade with the R level being the upper lid. So same thing here. I'm not actually going to go through and read all of this, but we'll cherry pick what's relevant in the here and the now. And then absolutely, if you're on the recording, you can pause it, take a read through all of it just to see how we kind of look at markets. But basically, we started the week again Saturday. Market broke. We tested the previous year's mid. Remember, yearly price points are going to be very important as funds kind of balance their book. So previous year's close, very important this month. Previous year's mid, also important this month. And so we priced to it. and quickly rejected. We missed it by a couple points. And we got that sell program, right? That sell program quickly turned into a sell directional breakout. On that sell directional breakout, we immediately target the DP, right? 1 APMD down. The CR minus is your half APMD move. So we held it, and then cracked into the DP. One thing to note, we didn't test the DP figure, but we did test the upper alert distance. The alert distance, which is the negative dash line to the positive dash line, basically acts as the figure. It creates some slippage, some variance, and acts as signal acceptance. The fact that we obtained it and didn't really break into it is positive. It's a strong show of the market, right? Currently, we are not in any of the optimal or the hedge themes. However, we are in a buy DP fade. So we are in the hedge themes, right? So where is the buy DP fade? Down here. Let's see. And then we'll kind of highlight all of this, and it will talk, the playbook will talk us through kind of what has happened, which is interesting always to read to give a trader context. So a sell directional breakout, which is what happened yesterday. Strategy can be used to capture a new price decline with the expectation for a breakout below the DP. Predict profits at the DP as it defines the structure low point for any buying if the corrective nature of the state is going to persist, right? Which is exactly what happened. The buy DP fade strategy, which is what we currently are in, will work best when any negative impulse stabilizes in front of the DP within the alert distance and variance metric. We almost did it, but we actually stabilized just at the positive alert distance. This shows strength. A break below the DP into the lower metrics is a sign of weakness, limiting any positive reaction to the directional. A breakout below the DP does have the potential to fully engage the bear trend. Use a sell DP breakout strategy to capture a new decline, but keep leverage light and risk less. Go for more. The market should continue to hold a negative trend, so work structure until it's broken. A market that bounces in front of the DP, especially early in the session, can be leveraged with a bi-directional breakout using an aggressive trail stop, as a corrective trade can quickly reverse positive. The likely outcome is for the market to reject from the UPR level range and fall back into sideways digest. A breakout above the R level should provide some emotion on the initial signal if the corrective trade is going to extend. If not, more of a probe higher will be the expectation, with the market settling into a sideways trade. So the note of the week: the market is in a corrective position and sharp positive surges are not expected to fall through. If after a rally the market stalls and starts to build negative structure, look for sell opportunities and work it until the structure is broken. Don't leverage early weakness, as the real selling energy is above the market at the UPR level range. Negative signals below the directional are not expected to be as much or to have as much energy and are subject to a corrective turn. Use a bi-directional breakout to capitalize on positive shifts up to the R level, especially if it is followed by a successful buy DP fade. So currently, what are we in? We're in a buy DP fade. So the market created the sell directional breakout, targets the DP. If the market is strong, it should hold in front of the DP figure. More importantly, it should hold right in this tight range here. So 2716 down to 2700. Fact of the matter is, we actually held all the way down to the tick almost. So 2717 and a half, right? Quickly, we've stabilized here, and we are in a buy DP fade. Over the previous week's low is positive. Over the CR minus, positive variance is your validation, right? For this to continue and what you're looking for, again, next 36 to 24 hours, which makes a lot of sense. Bitcoin and Ethereum are correlated. It's interesting that they are very much monitored over the next 24 to 36 hours for very important levels, right? So 28, 36, 82 needs to hold. If it does not, that's not positive. It's more digestive, sloppy, and could break down to the DP. what we're looking for is positive price structure, right? So that should have been the low for the week. If it is not, that's a problem, and that's a reason to lighten up. Otherwise, previous week's low, even if it were to retest at the open tonight and then rally again, that's positive, right? Over 28, 36, 82 again. Validation, where does it target? Back to your directional. What are we really looking for a very corrective trade? You want to see over the previous month's close trade, right, which is 29.90.25, and that coincides with a bi-directional breakout. Bi-directional breakout targets the UP for that full trap up to the R level. That this range that defines this upper extension area here is the expected exhaustion area, right? So if we do get subsequent bi-DP fade plus a bi-directional breakout, targets the UP to the R level, the expectation is that positive structure really needs to continue to hold. Otherwise, the state will perform to expectation. And what is that? Positive rallies that are sharp and strong, but at the moment in which they lose the bid, they lose it quickly. So don't get caught chasing directional or chasing the breakouts. Anticipate it and keep those trail stops tight, right? And so a perfect example of how to manage that trail stop currently, if you are a buyer of the buy DP fade, market really should hold over the previous week's low, right? You kind of pair the time frame with the price map and you get a really good picture, right? And so sell stops should be here, right? We should not be retesting those lows. That's not a positive price structure. It's sloppy. And then we should price through the CR minus. Let's say we do, just start jamming them up, right? Keep moving them up, keep moving them up with the expectation that any turn in the market has the potential to create a new selling pressure, if not bear trend, right? And in that case, there's no need to fight it. There's no need to get attached to the idea. The purpose is to lock in the gains, right? So Ethereum in Bookmap, let's take a look here. 28.20, we have some resting offers. That is very important to monitor. So the next test for Ethereum, which is happening right now, is your CR minus validation. We really need to get over it. Otherwise, it's positive, but we want to see a quick move higher to the directional. On the bid, 26.90, right? So right back into this DP level. Again, that would still be positive, but more within the sloppy digestive trade versus kind of this strong correction rally that catches shorts off guard, right? And 2600, so that's a full breakdown down to basically your previous month's low. We don't see a lot of alignment there outside of just that previous month's low. So that's Ethereum, and then what time do we have? Yeah, we have time for the ES, and then we'll open it up for questions. All right, back to the ES. ES had a great week last week. We covered it on the stream, and then we got that buy R breakout, which was cool to see. So positive structure. I was watching the price structure last week. Picture perfect. We got that low. You got this new low. It never once was price structure broken. And we continue to hold through, and that's exactly what you want to look for when you get a buy or breakout, right? And so that was cool to see. Now, let's talk about the ES and where we stand today. So currently, we are in a neutral digestion state. So this market state is characterized by sideways trading conditions with limited profit potential. Opportunities exist on both sides of the market, but directional moves are not expected to be sustained. Avoid chasing momentum. Be patient and focus on execution at key structure points, employing effective risk management strategies that protect any unrealized gains. Transition indicators. This state can be the precursor to a potential breakout as prolonged coiling action builds power. Looking for an early session trend move with no break in positive or negative structure as a tell to identify a possible breakout. A simple moving average can be an effective visual tool to identify any impending shift in state. If the shift in state is true, price action will maintain momentum into the settlement phase. So basically that means it starts and it never stops, right? Currently, we got a rally off the open that quickly reversed into the directional, and we've held. So we're a bit different than just kind of that runaway rally, but the sentiment bias is positive, right? So going into structure, sentiment bias is positive. That is equal. So the R level is equal to the lower critical range extreme, which is downside pivot, and that defines the expected low point for any digestive trade. This market state, although digestive in nature, will have a positive bias above this inflection point. If the market is going to maintain a firm trade, it will build a base above the DPR level for a rally targeting the upper critical range extreme at the UP. The positive sentiment will provide encouragement to any UP breakout, but the sideways nature of the state must be respected as extended follow-through is unlikely. A break below the DPR level is a sign of weakness that has the contract vulnerable to a negative transitional shift. Don't fight negative price action structure below the DPR level. So strategy for the week. Currently, we're in a bi-directional breakout, right? So we had it's basically a bi-directional fade, right? And so let's take a look here of where it's applicable to us. So all right, so it's not covering the directional as much here. Part of the reason for that is we are in the neutral state. So a lot of the focus within the playbook is around the critical range extreme. So I will give a bit of context there. Critical range extreme, for those that don't know, I'll kind of zoom in down here. DP to the UP. I'm not sure if you can fully see it, but DP to the UP, which is the UP up here, DP down here. R level is stationed at the DP. That's positive, right? The expectation is on a digestive shift lower, this level should hold, right? So 6.716, 6.7. That is the most powerful buy the dip opportunity this week. Closer you can get to the figure, the less risk you have to take. But currently we're in a bi-directional breakout, right? And where does that target? The UP. So what are we looking for? Short term, what we're looking for is previous week's close, previous week's high, previous month's close. All those levels here, we need a base over it. Otherwise, they act as resistance, and likely, and more than likely, we will come back down and remain to the state, which is sloppy, digestive, and trading around the directional. Any trade down to the R level is a opportunity to buy with risk under 6,700, right, which is this lower bound on the R level. On the upside, the UP, right, so sell UP reversals are the optimal themes. So if we do get this pricing through, and let's say we target 6,975, and we quickly revert, right, that is a sell UP reversal. The expectation there is quick fade down to the directional, right? If not, a full completion down to the R level. And so this week specifically is defined by this range, right? The critical range. So 6,95542 is an important overhead level, all the way down to 6,716.67. Those are the figures to watch within the range. Neutral digestion, some interesting trades outside of kind of just directional trades. This state is applicable for some option strategies, right? So you can see some options here. So you can get a optimal would be a buy call. Actually, let's look specifically here at the income. The reason I say that is alpha strategies here within the options are more for kind of short-term trading. Income is more to the state, which would be your sell vol trades, right? So you can get a sell call, buy ratio call spreads at UP reversals, right? Target strike focus would be your UT1 to UT2. And then your at-risk income would be invalidation over the UP, right? You get into that UP breakout range, then it's just buying those calls back, right? So in a neutral digestion state, there are some actually interesting sell-vol strategies that work as well. So that's the outlook for the ES. We'll open it up for questions. So if you have any questions, we'll give it a few minutes, see if there's any questions that come through. And if not, we will hop on next week. So feel free to drop them in the Discord. Cool. Yeah, Steven said he needs to rewatch. I believe the recording will be up as soon as we hop off. Awesome. Yeah, they'll be on YouTube. Cool. All right. So it looks like no questions this week. So if you wind up having some questions through the recording, drop them in the Discord. And I'll get to them as soon as I can. So enjoy the week, guys. I'll drop in that Fusaka news as well. That way you can have it in the Discord. So enjoy the week. Good luck.